The prospect of a nuclear deal being reached and sanctions against Iran being dropped has international investors and the rising middle class in the Middle Eastern state embracing new opportunities. Here to share insight on these future business prospects, Middle East and North Africa market analyst Matthew Spivack. Inflation, currency volatility, still two major issues that Iran is grappling with. We could be years out before they're really resolved. That being said, are markets heeding the message?
It's a really important question right now, and it's understandable why there's so much focus on Iran at the moment. Iran could become the biggest country to rejoin the global economy since the fall of communism in the early 1990s. Despite that, though, there are going to be huge risks that come along with the opportunities. You mentioned one of them, currency volatility and what that will mean for stoking inflation. That will make planning very difficult for the market. There are other major risks as well, though. A lot of companies are focused on compliance and sanctions challenges, what it might mean even after a deal, the exposure to those types of issues.
Absolutely, and we're talking about people looking to export, import. They are the ones that are going to be hit the hardest.
Yep, absolutely. And thinking about the uncertainty that comes in the market with this, it's going to be difficult, even after a deal is reached, to have a clear idea on where things are going. That's something that really disrupts business when you can't have a clear idea on how you want to set targets and really what the levels will be when you're trading.
And the Tehran Stock Exchange, of course, has reflected this optimism we've been talking about. There's been a healthy jump there. Tell me, how high do you think the stock exchange numbers are really going to go?
It's a good question. And one of the things we anticipated is that there would be a boost to the stock exchange. There's a boost to consumer and business confidence. We could also see a boost to tourism revenue. But the fact is, this is a long-term process. A lot of what Iranians are hoping to get out of this deal will not be realized, obviously, now until a final deal is reached. If a final deal is reached at the end of June, there will then be a process for how sanctions will be relieved and how that will impact the economy. It could be a little bit of a letdown because it's not going to be coming overnight, the relief to the economy.
The Africas, for instance, or even Asia, Thailand. When we're looking at these emerging market players, are they at a real threat as Iran enters into the marketplace as a real formidable foe? Yeah,
from a competitive landscape, they are going to be some of the players that will lead the charge. And I think that when we think about the big trends that we're watching, there already is an established presence for some Western multinationals. You see a lot of German companies, French companies as well. But the real advantage that we see for emerging market players is their banks are going to be a lot less reticent to be aggressive in the marketplace if and when there's a deal, as sanctions are being relieved. And because of those banks are going to be taking more of an aggressive stance, it allows companies within those countries to be more aggressive as well in the business transactions that they're undertaking and in expanding investment in the market as well.
Let's talk about fat cat players who are really going to take advantage and are looking at Iran as their long-term investment strategy. What advice would you be giving them in terms of phasing in their business plans as the country potentially could open up as early as this summer? Yeah,
there's a couple things that we're seeing big businesses do right now. Number one, they're reassessing where does Iran fit in their long-range plans. So thinking about Iran versus other markets. In 3 years from now, where does Iran sit? In 5 years from now? If it is an important market, if there's the sense that opportunity outweighs risk, then companies are looking to do a lot more into putting a lot of resources into the upfront part of their planning, thinking about, okay, if we want to capitalize on these opportunities, what exactly do we need to be ready for if and when a deal is reached, if and when there's sanctions relief, but then also, because of some of the big risks in the market, how are we going to do our best to mitigate those risks?